All right, good morning. Gary just hit it. Sorry, trying to set everything up for you guys, making sure that you can see what you need to see. And now I got you where you can hear what you need to hear. Good morning, everybody. It's nice to see you. Hope everybody is doing well. Hope everybody had a wonderful long weekend, took a little time, relaxed, had some fun, all those good things that you need to do. My name's Mark Novak. We're going to ease into the day today, have a good time. There's about 23 of you in here. That usually doubles, so I won't go too terribly fast. What I will do, though, is we'll take a look, like we do each and every morning, at our news before we do anything. Let's make sure that there's not something going on that's going to make this market move erratic, make it a little crazy, difficult to trade. Each and every morning, guys, I go to forexfactory.com and I just take a look at news releases for the day. And I'm not really concerned about what the news is. I'm not even concerned about what the outcome of the news is. I use this news release as a way for me to recognize that there may be somebody. Very nice, Gary. Bounce back and forth with John Novak. He has done an enormous amount of work with that in the last couple weeks. It can be. It can be, it can be. I'll tell you what, I've got a laptop right now, and I'm having no challenges with NT8. I think I had one spontaneous close this morning. But honestly, in the last 5 or 6 days of running NT8, it's maybe shut down on me 3 or 4 times. Wasn't too terribly detrimental. And then John's come together with a lot of workspaces that help eliminate that challenge as well. So we're all working towards it, without a doubt. We're going to get there. I'm watching for high impact. I'm watching for medium impact. And then I'm being aware when there's low impact news. All of these, and the way I like to think about it is it's just a trigger for a reactionary response for somebody with the ability to move the market. So if I've got $1 million in my account and I'm concerned about what the core PPI says tomorrow morning at 8:30 a.m. when that news releases, I may take a long or a short position. I may take profits from a position that could make the market move erratically. So those of us that aren't trading 10,000 contracts, those of us that aren't moving the market ourselves, being aware of this news just keeps you safe. Lets you know when it's time to sit on the sidelines for just a minute and wait for that absolute best of the best. And then each and everything that I talk about during the day, guys, comes from this education page right on the Nexgen T3.com website. If you're brand new joining us, and I know that I have some demos in here today, and I'm pretty excited because I love the demos, and I know that you're going to have questions. Guys, everything that I talk about comes from here, but my goal isn't for you to just sit in front of your computer and, oh, let me go through each and every video. Let me go through each and every slide and hope that I absorb it. What I want you to do is I want you to follow the path. I want you to go through the educational, to scroll through Discord, to look at everything available to you. But the most important thing that you can do is come back to this room and say, hey, Mark, I was reading about Fibonacci and how do I use these lines to make good decisions? Or I was curious about the 5-1 trigger lines. You know, I hear people saying that they're better when they're strong. What does that mean? So bring your questions to class. Guys, 9 times out of 10, I am easily distracted. And if you put a question in this room, it's about the equivalent of you getting a private session. I'm going to make sure that you're answered. And the best part is you're going to be able to help about 20 people around you that had the same question and didn't want to put it out there. I have 0 time frame. I have 0 syllabus. I have an idea of what I'm going to do. But the reality is, guys, is this class is run by you. Your questions are more important than my timetable. I don't mind coming in early. I don't mind staying late because ultimately the goal is to get you to where you understand what you're looking at. So with that said, off the education page, the software user guide, I want you guys to know that if you have NinjaTrader questions, for example, today is the 17th. If we're on NinjaTrader 7, we're going to be rolling contracts. It's time to make that crude oil roll. So there's a section in here dedicated. This is all your NinjaTrader how-to. Whether it is opening, closing, troubleshooting, scaling, stops and targets, how to get those trade markers on there so that you can see them, using the drawing objects, market replay. This one right here, adding symbols, rolling contracts. I just opened my NinjaTrader 7, so we're going to go through this together because this is what's happening today. Crude oil rolls every month. So if you pull up your NinjaTrader 7 workspace and go to Tools and Instrument Manager, feel free to do this with me. You can see right now my crude oil date is 223. I'm going to type CL into my search bar and click Search. And if I highlight that crude oil futures, you'll see that the new expiration is 323. So I'm going to left click and bring that over to my instrument list. So this makes it where I can build a chart with that March contract of crude oil. When I click OK, it's now in the system. But what I need to do, and this is also in the exact same link that I gave you, is I'm going to build a market analyzer. And this market analyzer is how we check the volume to make sure that you're trading on the contract with the most volume. I'm going to right click and I'm going to put in that default analyzer template. And then guys, let's just do a comparison. We'll put in that 223 contract and we'll put in that 323 contract and we'll see which one we should probably be on. And right now it's about 2/3 in February, 1/3 in March. The market's already open, so for now, just going to go ahead and keep it on that 223 contract. So if you're one of my crude traders coming in, make sure that your crude contract is on that 223. This one's going to have the most volume. Chances are tomorrow morning when we check this again, we're going to see that the volume has rolled. But until it does, the more volume typically means a little smoother day for you. And it's almost split today. And when it's split today, things can be a little choppy, typically not very though. So we're going to trade rules, either the rules are met, the rules are not. But as we go through that rolling, that's how you do it. If you need questions or you have questions, you need help with it, give us a shout. And John Novak will probably update the installers on the website to reflect that new contract. In the next day or two, if not tonight. All right, so that's going to be software user guide. This is where you're going to see anything and everything that you need for that NinjaTrader. And then this is where the magic happens, guys. This is the tutorial section. This is where everything that I talk about from a basic standpoint comes from. This is where your rules, this is where entering, exiting, management, all that good stuff is going to come from this tutorial page. And you'll notice that the URL says building a foundation. That's exactly what your goal should be in the beginning. I want you to do two things for me. The first thing is I want you to switch your brain to student role. Most of the people I deal with are very much exceptional at what they do. They're the people that create the answers, not necessarily ask the questions. I want you to flip the switch in your brain that puts you back to that student mode. We're in kindergarten as we learn these, and we're going to advance through all the grades at a pretty rapid pace. And the second thing is I just want you to give yourself permission to be new. It's okay to come into something brand new and not understand everything that's going on. The more you raise your hand, the more you post pictures, the more you ask questions, the quicker you're going to get exactly where it is that you want to be. And hopefully that goal is financial independence. It's never having to go to work again. It's taking advantage of the moves in the markets and being able to create a wonderful career for yourself based on that. So all of that we talk about is going to come from the tutorial section. And I want you guys to embrace this. For the first 30 days, we're going to keep it simple. For the first 30 days, Going to focus on the highest probability trend trades. And we're going to focus on the high probability trend trade because this is a trade when each indicator on every chart lines up for the rules for the trade. This is a trade that when you learn the rules, when you follow the rules, you're going to find yourself in a position taking trades that typically win between 70 and 80% of the time. And I've even given in the room earlier a high probability trend trade checklist so that you can focus on and be very concise for that first 30 days, only looking for the best of the best. If you scroll up just a few steps, you're going to see that checklist in there. I'll put another one in there before the day's over so you can get it. But by focusing on this high probability trend trade for your first 30 days, allowing yourself to be new for the first 30 days, it's going to provide you a skill that's going to be invaluable as you become a trader, and it's going to be chart reading. You're going to be able to read your charts. Oops. And there's John Novak with the new crude oil installer for the 323. Thank you for that, John. Your goal as a brand new user with Nexgen is simply to be able to read the indicators. That's what this class is dedicated to, getting you to that position where you can do it, because you're going to realize that 90% of what we do is simply reading our charts. 90% of what we do is opening up the workspaces, looking at those charts, and understanding three very key concepts: where the market is likely to continue, and then you're going to be able to pinpoint your entries based on this continuation point. You'll be able to recognize where the market is likely to go. And by recognizing where the market is likely to go, it's going to help you make good decisions on profit targets. And then finally, you're going to recognize where the market is likely to stop. And you're going to understand these termination conditions as a giant red flag, keeping you from taking trades into areas that may reverse the market. So as a brand new user, you should focus on your first 30 days. Understanding, developing, getting these skills put in place. And then that's when, whoops, sorry, I didn't mean to scroll all that. That's when the next step for the Nexgen user comes in. And that's being able to recognize a medium probability trade. And this is when most of your indicators line up. Obviously, guys, nothing is perfect all the time. So sometimes there's going to be a trade where most of your indicators line up for the trade. However, a small issue exists. Your ability to read your charts is going to let you recognize that small issue. And this really is going to be the vast majority of your trades. And when you're executing medium probability trades, you're going to take these trades and manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. And if there's trouble in your way, you may take a portion of the position off at the trouble spot. Again, chart reading allows you to identify that trouble spot and reduce your risk to a zero loss level. So we're going to focus on high probability trade for the first 30 days. We're going to focus on 3 rules. And the cool thing is these 3 rules are going to take place on only 2 charts. We're going to keep it as simple as we possibly can. And the 2 charts that we're looking at, I want to go through this. I want to try and make this very easy for you. Remember, 3 rules, 2 charts. We're always going to start on the 13.2. I love the phrase, let the 13.2 lead the way. The 13.2 is a larger chart. It's a slower chart. It's like a broad stroke of a brush. And that broad stroke of a brush is going to give you so much information on only one chart to help you get to where you need to be. You're going to be able to determine the trend of the market. If the background on the 13.2 is green, you're in an uptrend, only looking for those rules to be met for high probability trend trades long. If the background on the 13.2 is red, you're in a downtrend. You're only looking for those rules to be met for high probability trend trades short. Really, this is the first advantage that you're going to provide yourself, is recognizing and trading with the trend. And you're going to do this with the most current bar. You're also going to be able to recognize rule number 1 for a high probability trend trade. And rule number 1 revolves around momentum, telling us that we must have strong trigger lines to take a trade. This must happen on the largest, slowest chart. And then when that rule is met, we'll go to rule number 2, which says that you can't trade in determination conditions. Those are those areas likely to stop the market. We're going to make sure that we're not trading directly into one of those areas because it may reverse and may go against us. Rules 1 and 2 are met on the 13.2 before you ever take your eyes to the 5.1. And your 5.1 is going to be your entry chart. The 5.1 is where you're going to refine that broad stroke of a brush. And we're going to be able to pinpoint, you're going to be able to pinpoint with amazing accuracy where that market is likely to continue. And this is rule number 3. Rule number 3 is where when you have those strong triggers, when you have nothing in the way, you're going to be able to use a limit order to buy or sell a pullback in an area inside of favorable large triggers. And by doing so, it's going to allow you, whoops, all my pictures just popped up. It's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. So this is going to be our goal for the first 30 days. 3 simple rules executed on 2 charts. And those 3 simple rules, I like to put this in the room. There's a little longer version in the tutorial section. Guys, this is breaking it down as simple as it can possibly be. We're going to look for strong triggers, no termination conditions, and then we're going to use a limit order to buy or sell a pullback in an area inside of favorable large triggers. Those areas are fibs, midbands, and 1-to-1s. And we're going to talk about each of these extensively and make sure that you're comfortable with it. But I want you to think of your rules as advantages provided when you get into a trade. Strong triggers is going to provide you the advantage of momentum. No termination conditions is going to make sure that you have a clear path to your target. And then by using that limit order to buy or sell a pullback in an area inside of favorable large triggers, you will have the advantage of an entry where the market is likely to continue. So as much as you think of the advantages provided, I want you to focus that these are also the advantages that you give up when you make a decision to break your rules. Not that anyone in this classroom is going to do that, right? So 3 rules, 2 charts. Guys, let's define each one. Let's give you a visual of what these rules look like. And then we're going to spend as much time as we can today in the live market excuse me, reading our charts, reading our indicators, developing those repetitions to give us confidence. But everything starts on this high probability trend trade with a strong trigger look. And this is that look defined 100% straight from the manual. In an uptrend, when my background is green, my small trigger lines are breaking away from and accelerating away from those large trigger lines. Large trigger lines are wide and angled in the direction of the trend, guys. And it's this space provided between the small and the large that lets me know that the odds are favorable for the market to continue up. Rule number 1 gives me the advantage of odds favorable momentum. You see the same thing in a downtrend. Small trigger lines below the large. The large are wide, they're angled in the direction of the trend. And it's that space provided, that space between the two, that lets me know that the odds are favorable for the market to continue down. In the beginning, as you grow with the software, this is the look that sets everything in motion, that gets you looking for that next rule. Because when those small triggers return to and work their way inside of the large trigger lines, we call this a weakening of the large triggers, and anything can happen up or down. You give away your advantage of momentum when you begin looking for trades with weak trigger lines. So pretty simple. In an uptrend, from the point where the smalls accelerate away from the large until they return, this is going to be your area of focus, looking for rules met. From the point where they accelerate away in a downtrend until they return, this is going to be your area of focus. So I'm going to ask, give me a Y in the room, please, if you're with me, especially if you're brand new. Rule number 1, odds favorable momentum. This is how we're going to start it. Everybody cool looking at it, recognizing that look? Because you're going to get really good at recognizing to give yourself that advantage. Good morning, Sophia. It's nice to see you. Rule number 2 says don't trade in determination conditions. Hey, Z, nice to have you here today. Termination conditions are simply areas that may reverse the market based on a simple comparison. And first, let's go over the areas. The areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, a cyan or a magenta divergence high line, any third divergence in the same area, or a large chart midband if the large triggers are a full bar away. It's a simple two-part process in order to recognize whether or not an area is considered a termination condition. Guys, anytime you see one of our users post bingo in the room, that means that they took a trade and that trade made it all the way to their profit target. That's one of the nicest sounds in the room, is that bingo. Good morning, Mike. It's nice to see you this morning. In order to recognize the termination condition, two things have to happen. The first thing is that price reaches an area. It's a pretty easy concept. Price bars come down, reach one of these Fibonacci areas, fibs, resistance, 1-to-1s. You'll see that it happens right here. And then you just ask yourself, well, where are my trigger lines? If all of the trigger lines remain above an area of support, that area of support is likely to stop the market. No more short trades. On that same token, price reaches this area of resistance. Absolutely none of the trigger lines break through. This area of resistance is likely to stop the market. So these are two examples of termination conditions. So as you open up your charts and you're looking at your charts, even with that odds favorable momentum, with rule number 1 in effect, if it reaches one of these key areas, we're going to show some respect to the market and we're just going to be patient. We're either going to let the area break with odds favorable momentum, or we're going to allow that market to reverse off this potential reversal point. And when it provides us a full reversal, and you can see that both your small and your large triggers get above this area of resistance. This area of resistance acts as support. This is when we consider an area broken. And this is when we'll look for that high probability trend trade. So price reaches an area. None of the trigger lines break the area. This is an area that may reverse the market. No more trades in the direction of the trend. See one from the bottom. We see one from the top. And then when all of the trigger lines make it to the other side of an area, we consider that area broken and we begin looking for the rules to be met once again. I know that was a little quicker, but we're going to do a lot of this in the live market. Guys, do me a favor. Give me a Y in the room if you're with me on this simple little recipe for termination conditions. Even make it bigger here. Price, 800 might be a little too big. Price will come in, make contact with an area of support or resistance. If the trigger lines do not break through that area is considered a termination condition and we're not looking for trades in the direction. If the small triggers and the large triggers break above that area, the area is considered broken. And guys, if the small break through the area, but the large have not, this is what we call a 50-50 look. And I want you to take a good look at this. The large remain below, but the small are above. We talked about those medium probability trades. Guys, this is a 50-50 look. Not because that's your chances of winning, but because 50% of your triggers have broken through the area, 50% have not. This is an area with the potential to break, but it has not yet broken. So if our conditions look wonderful on the 5-1, we may take one shot with that odds favorable momentum at a high probability trend trade. So this is using areas, support, resistance. Triggers either break or they don't. It's a pretty clear-cut black and white approach. The 50-50 means this area has the potential to break. Same thing on this side. Smalls are through, large are not. With that odds favorable momentum, this area has the potential to break. Sometimes the market makes a turn, but that turn's really not coming from anywhere. That turn isn't from a key area. It's already broken through a key area. Our final termination condition is going to help you identify these potential turns. But more importantly, this termination condition, which happens on the smaller, faster chart, is going to help you manage medium probability trades. It's going to help you see change in the moment on that smaller, faster chart. So this is a 5-1. This is a smaller, faster chart. And 3 divergence in the same price range may terminate the trend. This is a very powerful condition when the 3rd divergence happens with the small triggers inside of the large triggers. So if you're brand new with this, you may be wondering, all right, that's great, Mark, but what's a divergence? Well, a divergence simply means that when this pivot is formed, when the market goes from down to up, if you see this negative number, if you see this cyan divergence line, if this purple arrow represents the momentum of the move, momentum simply isn't following price. You may see it a second time, and when you see it a third time, your 5-1 trigger lines go from odds favorable to anything can happen. This look becomes a very key look that the market may reverse, even if it's momentarily. And you see the same thing from the top here. Momentum doesn't follow price. Once again, a third time, those trigger lines are inside, and you'll notice that the market then moves down. Claire, it's my favorite word in the English language. Show us a picture of what you did. We'd love to see it. So 3 divergences, 3 losses of momentum, small triggers inside the large. Guys, this is a look that things may be changing. You'll see that look. Maybe where price has exceeded areas and hasn't reached the next. You'll see that look. Even with odds favorable momentum, your smaller, faster chart can give you an indication that things may be changing. All right, so we have termination conditions. No termination conditions present. Odds favorable momentum. Guys, this is my favorite part of being a day trader. Taking entries and being able to pinpoint with amazing accuracy where that entry needs to come from. When the rules are met on the 13-2 with that odds favorable momentum, nothing in the way, your 5-1 chart's going to look like this. Here's an uptrend, nothing but up bars. We're going to focus our attention on the 5-1 large triggers, and we're going to look for those areas of support that may be inside of them. Fibs, mid bands, and 1-to-1s. This is going to be our area to watch. There's no trade to take yet, but we're focusing on it. We're waiting for conditions to be met, and we have made the decision because rules 1 and 2 are met that it's time to look for that trade. But the rule says we're going to buy a pullback, buy or sell a pullback at an area. And we're going to use a limit order to do it, which means we're literally going to let that market come down to us in an uptrend or come up to us in a downtrend. When this reversal bar forms, this is the pullback. This is time to focus on your entry areas. In your entry areas, your window of opportunity is going to be from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Guys, this is a part that you're going to be able to identify these areas almost instantly. Most people get their entries down within the first 3 to 5 days. It takes a minute, but it's not too terribly difficult. But what happens is you're going to be able to recognize in these areas, this window of opportunity. Because of the odds favorable momentum on the 13-2, all you need to do is right-click and activate your limit order right at the top of that window. And one of two things are going to happen. The market's either going to take that momentum and go without you, in which case we don't chase the trade, or price is going to come down right to that window of opportunity. And just visually, I want you to see it. It's an area of support or resistance inside of favorable large triggers. So from my highest point of support to my lowest point of support, this is my window of opportunity. This is the range of my large triggers. So it's a box within a box from the highest point of the triggers to the lowest point of the triggers, and then the areas that may lay within. Because of the momentum, we're entering this trade at 79.21. We've took a long position because we have the odds favorable momentum, because we have a clear path, nothing in the way, no termination conditions, And now we've been able to identify where the market is likely to continue. Your initial stop will go below that window of opportunity where the market shouldn't go. And guys, I will take this trade 1,000 out of 1,000 times because of the advantages my rules provide. And typically 70 to 80% of the time when we have this high probability trend trade, this is our result. As the market begins to move in the direction of the trade, we get that reversal bar up. You can reduce risk a couple ticks below that reversal bar because you waited for the pullback to the best of the best area. Your risk is reduced. Because you waited for that pullback to the best of the best area, your profit potential is increased. Good morning, David B. Guys, this is your best of the best. This is your high probability trend trade. All indicators on all charts line up. And when you put the two together, John moved my picture that I usually go to. That's okay. Your entries are going to look like this. John gave us a lot of great pictures this weekend. Pullbacks directly to an area of support inside of favorable large triggers. Being able to identify through chart reading where there are potential exits. This is all on the 5-1 when the rules are met. On the 13-2 as we come back again for short trades. Pullback directly to an area of resistance. It's right inside of those favorable large triggers. Guys, these are brand new pictures that have been posted up in the entry section. Make sure that you come in, take a look at these. And this also shows an awful lot of the best looks. The location of the area is below the areas, is below the large triggers. No areas inside of favorable large triggers. This is not your best look for an entry. And you can see that the market comes down, reaches support, and then ultimately you do get an area of support right inside of favorable large triggers, and the market begins to work its way up. This is a great area for study as you come through, looking for your absolute best of the best for that high probability trend trade. And then as you scroll down, it gives you more and more examples of medium probability trades, continuation trades, where you can go through and begin to recognize the best of the best. And what we're going to do in order to study is you're going to be able to look at your 13-2 chart, one bar, and if you recognize on your 13-2 strong trigger lines, no termination conditions, you can circle these tails. This is a going backwards study for you. This is scrolling back, looking for the best of the best. If you circle a tail, this wick on the 13-2, and it lines up with that area of support inside of favorable large triggers, as this is your best of the best entry. And I built this because a lot of people were trying to trade tails rather than areas. Don't wait for the tail to form in a live market. By the time this tail forms, the market's all the way up here. But when those rules are met, odds favorable, no termination, you're going to be able to recognize where that market is likely to continue and really have an order just waiting for it. Let's see if we can find an example here on the crude oil market. I just want to circle, and I want you to see, even if it isn't a trade, because this is a trade where a termination condition was present. Small triggers haven't cleared the area yet. So if you go through the recipe, area, where are my triggers? This isn't one of our high probability trend trades yet, but you can see how it still comes back to that area inside of favorable large triggers. And if you're just a little bit patient and you wait for the area to clear and for everything to roll, the market does give an opportunity to take advantage of this look to the long side. So I'm going to scroll back and we're going to look for odds favorable. And we're going to look for no termination conditions. and circle a tail. And all we're doing right now is we're developing a little bit of trust in the rules. We're recognizing that it doesn't happen every minute of every day. This one came back to an area of support, not inside of favorable large triggers. Day after holiday trading, pre-market's typically a little slower. So we're just going to be patient here. We don't have odds favorable momentum. Our areas lie below the large triggers. Rules give us an opportunity to stay out of that trade. Let's see, maybe the S&P is doing something for us. Dun, dun, dun. Not yet, huh? It is definitely a brand new day. Let's take a look back here, right in the middle of the night. Most of us were probably sleeping, but patterns tend to work whether it's the middle of the night grab this one. Let's circle a couple tails with that odds favorable momentum. You'll notice that it lined up right at an area inside of favorable large triggers. Simple trade, odds favorable, breaking through the area, pull back directly to an area of resistance inside of favorable large triggers. And guys, if you come through, what you're going to find is more often than not, when you do have that odds favorable momentum, that market tends to follow suit, tends to go in the direction of that momentum. Live chart reading indicators again. As that market comes up with odds favorable momentum, it pulls back, and then we see that multiple divergences in the same location, giving us that indication that the market may be reversing right there. Small's above the large are wide. There is no termination condition, but these multiple divergences in the same area, small triggers having worked inside of the large, gives you an indication that if you took a trade, that it's time to manage out of that trade. The market's likely to push lower. Guys, this is what we're going to do all day. We're just going to look at indicators, and we're going to look at the charts that you guys have posted. And I'm going to scroll back right now and take a look at some of the stuff that's come up. And it looks like I'm trying to get to the beginning of the day here. Dun, dun, dun. I know that, Joel, I believe you posted one in here. Guys, this is the second part of class. We do this quick run on rules, and now we're going to spend the rest of the day. We're going to look at what you've done. We're going to look at your entries, your exits. We're going to look at rules being met. We're going to look at the large chart an awful lot. Joel came in and gave us a beautiful example of allowing areas to clear, and I think that we actually pointed this one out, didn't we? This morning, where the market was trading into this potential termination condition. So Joel pumped the brakes, took a second, let the market clear, let the triggers clear, and then was able to take that little stab back with every chart saying up. Joel, this is a picture perfect trade. Absolutely beautiful work on that one. John's given us one. Let's see what it is. We have odds favorable momentum, right? He took one short, got a target, took a break even. Everything rolls, odds favorable, takes a nice trend trade long when everything is up and in favor. Goes too fast. The NASDAQ was too fast for that 8-2 chart. Yeah, I had a feeling it would be. For those of you that haven't met John Novak, he is always looking for ways to do things better, to make it easier for you. Looking at different markets, different patterns. It's pretty cool. It's a constant state of study. Gary, let's see what you did this morning. I love it when I see this. Gary came in and just gave us a picture of the exact lesson that we talked about that one. Z, I got you right now. Gary says, even with odds favorable market momentum, 1, 2, 3, 4 multiple divergences, Gary took a page directly out of termination conditions, didn't he? That same look that we talked about, multiple divergences in the same location. Said to him, don't enter this trade at the mid-band inside of those large triggers. And it keeps him safe. Rule number 2 kept him safe. Gary, this is a great picture, great recognition, amazing chart reading. All right, Z, let's take a look. So from the software user guide, I'm going to give you a fish because I want you to know where to find these answers, but more importantly, we're going to run through it together. Z, you have the capture software that was loaded onto your computer when you did the demo. So let me open up mine and we'll run through this together. And do me a favor as we do it. Whoops, where'd my capture go? As we do this together, come in, post a picture. Let me pull up some charts. Here's my capture software. Hey, good to see you, Paul. How was skiing? Cold? All right, Z, are you ready? So good. I like it. That's cold. First thing we're going to do is we're going to click this giant red button that says capture. Once I click that button, if I hover over just one chart, it's going to give me just one chart. So when you want to share in class, you're going to left click on your mouse in the upper left-hand corner. And we're going to drag that all the way down to the bottom right. Things that are helpful is if, and I just released, make sure that your timestamps are in there so I can line up the trade. Make sure that I can see price so I can line up the trade. And we're just going to click this capture an image. Once I click it, up comes our capture image preview. So we're halfway there. You can see that we've got all the timestamps. We've got everything coming through. So now Z, your job, and new users, the best thing that you can do is we're going to annotate this chart. I'm going to put this picture in the room one more time because the better the information you give me, the easier it is. Bruce, I'll cover that in just a second. I'm going to warn you right now, my opinion is worth exactly what it costs you. Everybody's different. Once we get the picture up, Z, there is an arrow. Maybe you want to point out these multiple divergences to me. Tell me why you didn't take a trade. Maybe you can use a shape button, but I did have odds favorable momentum. But the most important thing you can do is use this call out button. And I just put a picture in the room of what you should be writing on the chart. Use that call out button to write your rules on the chart. Point out when things are in your favor, when there's nothing in the way. Talk to me about where your entry is. And then I think one of the most important things that you can do for me is tell me how you felt. Were you anxious? Were you nervous? Did you feel good about the trade? Were you not sure if the rules were met, but you thought they were, so you took it? The more information you give me, the better feedback I give you. And guys, for 15 hours every week, my whole goal is to give you feedback on what you're doing. Once you have your information on the chart, you're going to click on this upload button. That upload button is going to take the picture and upload it to that screencast cloud. And screencast is going to provide you this link. If I click copy on the link, let me do a little pull over here. I can come into the education room and I can paste that link. And then all I have to do is wait for a break in the action to get that feedback on it. You can also, whoops, I minimized my room. You can also, if you want, just hit the copy button down here. And from that copy button, you can come through and paste it directly into the room as well. John, you can do it from capture as well. Just did it. But the great thing is if you have Snagit, which is the same company, same capture button, is you can take these pictures and that high probability trend trade checklist that I put in the room a little bit earlier, I'll put it in there again for you right now. You can literally put your rules, just paste them directly onto your chart, and you can begin the process of policing yourself, of getting in the habit of recognizing, did I have odds favorable momentum? Did I have no termination conditions? Did I have an area for entry inside of favorable large triggers? And the more often you can put this chart or write your rules on your chart, the more often you're going to find yourself taking good trades. Z, did that help? So guys, the second half of that lesson is those of you that are in the room, if you've never posted in my room, if you've never put a picture in my room, try it right now. Run through that process. Take a picture. It doesn't have to be of a trade, guys. You can take pictures all day. This is the current ES market. Let's take a picture right now. It'll show you. Whoops. It's not the one I wanted. Let's get everything current. I'm going to take my Snagit. I'm going to use that capture button. Guys, this is the S&P, and I want you to see. Let's go through and chart read. Right here, we see price reaching an area of support, right? Absolutely none of the triggers have gone through. Even without taking a trade, we can identify this as a termination condition. What else do we notice? This termination condition is creating a full reversal in the market. Those large triggers are going from red to green. The small triggers are giving us odds favorable momentum. Guys, I know right here that this is a termination condition that creates a full reversal. And rule 1 has been met for a high probability trend trade long. And I've got a 50-50 look on that area of resistance. The smalls are above, the large are below. There's odds favorable momentum. It has the potential to break. I can also begin looking over here on my 5-1 to see if there's areas lining up inside of favorable large triggers. You can do all of these things without actually having to take a trade. And then once you do it, you can put your checklist on it. Is the market coming from a good bottom, a termination condition that creates a full reversal? It is. Do I have odds favorable momentum? Yes. No termination conditions? Yes. Area for entry inside of favorable large triggers? Ooh, not yet. So we have to be just a little patient, wait for those rules to be met. And as this market continues in the direction, termination, full reversal, odds favorable, these large triggers begin to come up more and more. Where are the areas that may fall inside of them? Well, somewhere right around there. Areas of support. We're going to begin this process going through. This is what we're going to do each and every day. We're going to come through. We're going to look at the indicators. We're going to see what they're telling us. And everything that we just walked through, I believe John just popped in the room and called it pre-trade ES. Termination condition. Hasn't created a full reversal yet. He's looking for a momentum style trade. As you grow with the software, that high probability trend trade turns into catching areas earlier and earlier. Little extra money. Nice trade, John. Let's see, who is next in the lineup? Paul. Nice to see your charts again, Paul. There's a good bottom, right? That same one we talked about on the S&P. That termination condition creating the full reversal. Paul took the exact same momentum trade John did. Quick profits, gets out with divergence. Momentum in, momentum out. Paul, beautiful execution. I like what you did there. Gary, coming through, termination, looking at the 50-50. Says divergence would require a market signal. Nothing coming in for him just yet. Gary chose to wait for the high probability trend trade rather than taking the first shot at the momentum before those large triggers roll. Guys, there's going to be a million different ways to utilize the software. You're going to put yourself in a position through repetition to take those trades that are most comfortable to you. Nobody's plan is wrong. Everybody's plan is different. And you're going to see 1,000 ways to skin a cat. I know that's kind of an archaic term. Strong bottom. Finch, good morning. Recognizing the exact same thing. That strong bottom, that beginning to roll. Guys, this is your first entry from a good termination condition. And Finch caught the same one that these guys did. It's a quick run at profits. Nice job, Finch. Claire posting in the room. I love it. Let's see what we have. Where's my mouse? Multiple divergences, higher divergence, area likely to hold, smalls above the large. You take a beautiful pullback directly to an area of support right there inside of those large triggers when everything agrees. And you're looking to get to that next area. Claire, nice job. John put that note in there. When that momentum style trade that a lot of you guys took, after this one pans out, it usually results in a high probability trend trade. 50-50. Here's that trend trade that comes after it. It pulls right back to that HVA, right back to the area of support. And notice the window of opportunity. Goes from this mid band down to this support. One divergence prints on an area that has the potential to break but hasn't yet broken. Probably going to take out this pivot to support to that HVA and maybe resume in the direction. And sure enough, guys, that seems to be exactly what it's doing in the moment. If you took the first shot, you had an opportunity for quick profits, right? And then when divergence prints, because the area hasn't broken yet, some people will manage out. Some people will recognize that this lower divergence with the small trade, with the small triggers above the large, typically results in a pivot stop out right here at these large triggers, right here at these large triggers at support for continuation, looking for that 24-25 area off of a good bottom. That's all right, Gary. If you missed it, it just means that it wasn't yours today. Thanks, Paul. I'm starting to get good at this stuff. It's, guys, I'm telling you, one of the most amazing things I think to have happen in a while. Paul, I'm in San Diego today. We're going to take 7 days down here. Or actually 9 total, but we're already 3 into it. So love it. It's beautiful in San Diego. Oh my gosh. Let's go through the chart reading, guys. Why do we do what we do on this one? And I love everything about this trade. If you're brand new with me, this is exactly what you're going to be doing in life with us. It's going to be great. David, it's beautiful. And guys, I'm very fortunate. I have a lot of Nexgen users that are from Southern California, that have lived in Southern California. And you guys have given me some of the greatest ideas. Places to go, things to see, places to eat. It's already been an absolute blast. The most important thing about this setup right now, guys, is this right here, and I want you to recognize it. This is a termination condition. This is an area of support. Price has reached it. None of my trigger lines have gone through. And this area of support has created a full reversal. The smalls or the large have turned green from red. The smalls are above with odds favorable. This look right here, whether it is support or resistance, is one of the strongest looks you're going to see. You'll notice that if you tried to take a short into an area that hadn't broken, it didn't work out for you. In the beginning, you may take these trades a little bit. It's okay. If you take a trade into a termination condition, guys, show me a picture. Let's talk about it. Let's reinforce. And then this termination condition creates the first opportunity. When the smalls get above the large, Guys, this is a little more aggressive, not necessarily for new users, but as you grow with the software, this is going to be one that you catch. This is a great one. Your 13.2 makes a full reversal bar off a termination condition, looking for that quick opportunity, quick profits, and then that turns directly into our high probability trend trade. Smalls above the large, larger wide, angled in the direction of the trend. There is no divergence, no slowdown on my 5-1. Small triggers are outside of the large triggers, letting me know that I also have odds favorable momentum here. This is a medium probability trade. The area has the potential to break but hasn't broken. This is your perfect entry. And your stop is down here where the market shouldn't go. If you took this trade, some people manage out with a divergence on a 50-50. That's totally up to you. But you begin to learn through expectations. And Paul just posted a picture that said good prediction. It's not a prediction at all. And it's important that you guys understand this. This is pattern recognition. And I can tell you that the more time that you spend with this software, the more pattern recognition you're going to get. 2 years and 7,000 pictures later, I know that when I have this much momentum coming from a strong bottom, if the market pulls back to the mid-band and I get a divergence, but the smalls remain outside, dollars to donuts, more often than not, I'm going to get a small pivot stop out right at an area. And this one happens right at an HVA line. But let's analyze what we see. Strong triggers, right? Strong triggers. Strong triggers. Every chart is strong in the same direction going to the upside. That little bit of study, that little bit of knowledge lets me know that this is my most likely scenario. And it did exactly what it was supposed to do. Paul called it a prediction. I'm going to call it chart reading. Because remember, 90% of what we do, and this was such a great example of it, 90% of what we do is simply reading the chart, being able to recognize where it's likely to continue, where it's likely to go, where it's likely to stop. And we had each and every one of those on this S&P right now. And right up there to those one-to-ones, as predicted, right? Not so much a prediction, but now I have an area of resistance. Absolutely none of my trigger lines have broken through. If you had that fear of missing out, if you were saying to yourself, oh, I wish I would have caught that long, but I missed it, and you tried to take this one directly into an area likely to stop the market, you can see exactly what the result was. Guys, give me a Y in the room if you're with me on this one, because these are great lessons. Termination conditions that create full reversals, that's your money right there. This is the best of the best. Odds favorable momentum gets the ball rolling. And then really just taking a minute and making sure that you have the best of the best entry. And if it's not the best of the best entry, this is where your chart reading provides you with the best place for entry or the safest place to put your stop based on what's happening. 15 hours every week. This is what we're going to talk about, start to finish. We've got a picture from one of our users, termination, creates a full reversal, gives us odds favorable momentum. There's an entry directly at an area of support inside of favorable large triggers. Oops, accidentally hit the sell button. I've done that. We've all done that. That happens. And then look at that beautiful pivot, stop out, re-entry, and profits all the way up. Didn't get out, added on. Nice trade, John. Torrey Pines, David B., I got an invitation to go play it the other day. John and I and Melinda played it 15 years ago. It was absolutely beautiful. The weather has been very, very rainy here for the first few days, and I decided that if I was going to pay $150 for a round of golf, I was going to do it in the sunshine. So I may try and catch Torrey Pines later today. I think I'm going to try and walk on somewhere this afternoon, though. I'm excited about playing golf. And for those of you that don't know, John Novak just doesn't teach you to trade. He did amazing work on my golf swing when we were down in Florida. It was a lot of fun. And then Paul, we saw that one. And then Paul, your next step is you're going to be able to catch that pivot stop out. 25 the first time you played there. You know, it's only, if you're a San Diego resident, it's only $49 to play Torrey Pines, which is amazing to me. If you're not a San Diego resident, it's $150. They add $100 to it for that driver's license from the wrong state. Still worth every penny. It's so beautiful. I may play it. My wife keeps telling me, go play it, go play it. Have you seen the pictures? Go play it. It is, John. All right, guys, we made it through our first hour. Really want to spend as much time as possible focusing on the best of the best yet. You know what, John? I did buy gas. I made the mistake of buying it in the desert right as you get into California when there's no other gas stations available. And it was $6.99 a gallon. It's really not that bad. It's only about $4.50 a gallon here, which is twice what it was in Texas, but it's not horrible. I get pretty good gas mileage. Joel, picture perfect. And guys, look at the checklist on the chart. Ooh, that got big, didn't it? Is the market coming from a good top or bottom? Absolutely it is. And Joel knows this. He understands that terminations that create full reversals provide an advantage. Odds favorable momentum? Absolutely. Odds favorable on the 8 range. He's added this in, letting this range chart make sure that he has that same momentum. No termination conditions. And he takes that beautiful entry and then knows to put his stop outside of the window of opportunity, gets paid all the way up. Joel, you are trading wonderfully. I just want to throw that in there. I know you've done a lot of tweaks on your plan, focused a lot on consistency, and it's showing in your trades. Nice job, Joel. Gio, waiting for your trend trade. No strong triggers from a divergence going sideways. Small's below the large, right? Triggers are on the wrong side, Gio. Gio, are you not trading with synthetics on purpose? Just curious. Gio, are you with me? So Gio, try this, because right now you have your large triggers, you don't have your synthetics. Whoops. But while we do that, guys, anyone notice that every one of your trigger lines got above this area of support? Everything set up, and there was a nice... Gio, just right-click and go to your templates real quick and hit load. And on your 5-1, you can do the 5-1 Renko, or you can do the 5-1 Renko 2023 if you have updated. And that'll give you the 13.2 large. And if you do that, it'll kind of get you going back together. Z, when you say your charts are frozen, like that, nothing's moving, do you have the white arrow in the upper right-hand corner, Z? If you do, click it. It'll bring you to the most current. A lot of times when people think their charts are frozen, they bumped them a little bit, and they're not looking at the most current bar. The most current bar will always have that black highlight. If you don't see it, click this, and it'll help you out. Guys, once again, odds favorable, smalls above the larger wide, angled in the direction of the trend. And there was a pullback directly to an area of support inside of favorable large triggers. 100% cannot access the control center. Z, a couple things do that. Sometimes if you try to type and it falls into this, it may change your date. Go ahead and just close down and open back up. And then if you keep having troubles with it, because it's hard for me to diagnose from here, from Discord. If you scroll down, there's the tech support link right here. Create a ticket with Jason, and he'll get you 100% fixed. Or if you want to take a picture of your chart, since we practiced that, post it in the room, I might be able to take a look and give you a quick fix, no worries at all. All right, Paul, pivot, stop out, odds favorable, momentum. Should we talk about expectations, guys? Here's our previous pivot right at 1-to-1s. Flat now, break time. Geo didn't work. Still missing synthetics. So Geo, same thing. Guys, I will always do my best to get you squared away the best I can. But Jason and Tech, he can fix anything in a matter of seconds that might take me an hour to figure out. So if you have a challenge with the software, maybe you don't have the right indicators, things don't look right, you can always go to Tech, let Jason work on you for a second, and he'll typically get you fixed up. I always say it, but the only thing that Jason can't fix are the things he's talking about. John, he's talking about whether or not his synthetics are on his chart the way he's looking for them. It's not about whether or not it's a trade. I know. Smalls are above, larger wide, area hasn't been reached. Two divergences on the 5-1. We'll see what happens here, guys. We'll come back. We'll look at it. I'm going to leave this chart up. I'm going to take just a couple minutes. I need to go refill my water. We will get back and we'll look at more charts. We'll keep reading those indicators, guys. If you have questions, guys, this is so important. If you have questions, I'm going through and I'm looking. If you're brand new, if you're on demo, if you're in your first 10 days, 20 days, 30 days, 3 years, it doesn't matter to me. I want to answer your questions. Get them in the room. Show me a picture. Show me that you can post a picture. Let's have great conversations about everything that you're looking to learn. I'm going to take just a minute and reload my water. And then once I get that water reloaded, we're going to come back. We're going to watch the live market, going to answer your questions, look at your charts, and make sure that you are comfortable with what you're seeing. I'll be back in just a few, guys. You know what? I'm going to get off break, Elvis. Here I am. So once again, let's talk about expectations. And good morning, Elvis. Nice to see you in here. I feel like we chit-chatted about this one, right? This is the second time that we've seen it. 13.2 rules met 100%, right? Smalls above the large are wide, angled in the direction of the trend. We get that first divergence that pulls us right back to the absolute best of the best spot. Guys, this one went from 28.25 all the way up to 34. That is a 5.5 point move. That's more than enough on 2 contracts 2 or 3 times a day. Never work a day in your life. When this next divergence prints, the smalls are right at the top of the large, but the rules are still met. This will be the second time today we've seen the market come out, take out that previous pivot by a couple ticks, what we call a pivot stop out. Opportunity for entry with the rules met. Not a high probability trend trade. I think John Novak posted in the room. Taking trades from the wrong side of everything is a gamble. Your job is to learn your rules so well, to create this pattern recognition so well that you know when it's time to gamble and when it's time to not. This entry would have been right around 28.25. And once again, we're at another 5 points, 10 points potential on the S&P within a 5-point range. Always a wonderful thing. It starts with the high probability and moves into the medium probability. And to see the pictures that we missed as we go through. There's that picture perfect entry. Gets close to the area. Takes a lot of profits as it comes in. Exits on the way down. There it says no more longs for me personally. But we talked about that pivot stop out. And this is a great picture too. We saw this one already. Violations of the triggers for longs is bad. When everything rolls, gets ready to go. It's just not as high probability. Paul, let's see what we have. Crude oil, smalls above the large. The large are a little flat, not a horrible look. Price pulls directly back to the area of support inside of favorable large triggers. You've got odds favorable. Paul, nothing more than anything that wins 70 to 80% of the time. And let's go through this, 2 charts. Because I think this is a great lesson for new users as well. As you come through, I'm going to put the checklist right on this trade. Is the market coming from a good top or bottom? Is it coming from an area that creates a full reversal? I think we can say maybe not. It's gone a little bit sideways. Not a great termination condition creating a full reversal. Is there odds favorable momentum? There is. No termination conditions? Absolutely. Area for entry inside a favorable large trigger? Sure enough, it's there. This trade simply doesn't work. Rules met. And guys, remember, 70 to 80% of the time, this one's going to work out. 20 to 30% of the time, we're going to have to let the market be wrong with dignity. Paul, not a bad look at all. There's just a fight going on that you can't control. The post's so nice, he posts it twice. Or did I click on the same one? Oh, you say should have been watching this for safety. Paul, I don't know that this is a huge problem. No divergence, 1 divergence. You had every advantage. You really did. You had strong triggers up. You're coming. You had a bad top that pushed back to the mid-band. None of the trigger lines got back below. Everything says up. Everything says up. Everything says up. Paul, this one just didn't work. I think you took a great shot and you gave yourself a lot of advantages. And this is just one of those ones where you got to go, oh, you know what? They get to win this one. Claire, let's see what you're doing. Beautiful entry. Claire, that was an awfully fast exit. Oh, okay, I see you've got it split. So you've got one here, one there, picture perfect. And then that was your entry right at 28.50. And I guess it just missed you? Or are you waiting for it to come back this time? I'm not exactly sure. This was your best of the best. Everything said go. And now we've almost reached that key area as it's coming back. And I think you might have gotten into that one. Just missed you. That happens sometimes. Good job not chasing. New users tend to chase now and then. I'm going to show you an example from this picture. As price is pulling back to that area, new users begin to watch ticks rather than trusting the rules, because you don't trust the rules yet. You haven't gotten there. You haven't spent the time. I see a lot of entries on the high tick of this bar, only to have it come down to the best of the best area. So great job not chasing. Guys, this is the S&P. If you entered on the pivot stop out, 1, 2, 3 divergences in the exact same location gives me an indication that it may push lower, and sure enough it does. John says visual on his post. Inside the trigs, beautiful. Inside the triggers, beautiful. Not inside the triggers, less likely to win versus this. Guys, save this picture. Save this picture to your spreadsheet. Put it on your desktop. Everything that we teach in this room revolves around giving you advantages. Everything that we try to show, especially the new users, revolves around advantages. These 3 rules provide 3 very distinct advantages. Advantage of momentum, the advantage of a clear path, and the advantage of an entry where the market is likely to continue. Just like John has shown in this picture, where the market is likely to continue, willfully giving away an entry where the market is likely to continue. So when you have the advantage, things tend to work out. When you give away that advantage, it requires you to manage these trades more assertively. I like this picture, and it goes great with the lesson that we just did. All right, I'm going to give you guys an example plan, and I want to talk about this real quick for my new users. Just putting into play a plan that helps you focus on finding the best entries. So I just uploaded this into the room. You can download it. But this is an example of a trading plan for somebody that's in that first 30 days. And I've put this together to help you focus on keeping things simple. And not only keeping it simple, but putting yourself where you can be very, very exact on what it is that you're looking for. Using the phrase, my trade is, to define your entry point. And that's it. The first 30 days is focused on those great entries, that best of the best, just like the picture we just looked at. Use that phrase, my trade is. My trade is the high probability trend trade, and to enter the trade, I must have the conditions of this checklist met. I've put this checklist in the room for you a couple times. I'm going to put it in one more time so that you can download all this stuff together. But I'm not just going to put one in that has the words. This one also that I just put in is going to have pictures, not only of what the rules are, but what each rule looks like straight from the manual, straight from the learning materials. In order to enter the trade, you're going to train yourself. Rules must be met. Each of these rules must be met. And if they are, then you're willing to take a trade. Then you're going to get in with that limit order. You're going to take that absolute best of the best. You can put pictures of your absolute perfect entry. You can steal those pictures from the Discord traders chat. You can steal those from the manual. And then ultimately, you're going to take those pictures every time you take a high probability trend trade, and you're going to have this library of what you're doing. When you're taking those 50-50 trades, when you move into medium probability trades, maybe no divergence on the 5-1, small triggers outside of the large for your best chance of success. All you're doing in the beginning for this first part is you are 100% identifying your best of the best entry conditions. Guys, this is the easy part, and you're actually going to be surprised as you get 2 or 3, 4 days into this, how easy this becomes, how simple this recognition becomes for you with the very simple rules. And then the part that you're going to probably work the most on, and this is something I think that never ends. Your management never ends because your ability to read charts grows each and every day you spend time with the charts, every time you take a picture. But in the beginning, until you're able to read those charts, keeping a plan that's very mechanical, very methodical, that helps eliminate your opinion, your emotion, tends to be helpful for new users. So we've put this one together in the example plan, and it simply says, I will trade 2 contracts. We're not going to trade more to get back what we lost. We're not going to trade less because we're scared. Just going to trade 2 contracts, very mechanical. The initial stop will be 12 ticks, adjusted to below or above the window of opportunity. Once again, very mechanical, very methodical. We can identify that window of opportunity, and because we can, we know where to put our stop above or below. It says I will move my stop above or below the reversal bar when the trade begins to go in the direction of the trade. So very mechanical, very methodical. We're going to move it in the direction. And then we're going to take profits on the first contract at $100, move to stop to break even manual. You're not worried about what's going on. You have a very precise set of rules. Second target will be 200. And what you find is if you keep things this mechanical initially, if you enter the market on this trade at 40.23, by 40.25 you have $100 in the bank. The trade has barely gotten moving, but there's $100 in the bank. By the time you get to 27, you're already out of this trade for $300 profit that's in the bank, and you're waiting for the next best. The next best shows up right at 28.25. At 30.25, once again, you have $100 in the bank. By the time you get up to 32.25, there's that second 300. That's $600 over the course of 3 to 4 minutes. Very precise, high probability trend trade entries, very precise, mechanical stop placement, profit taking. So the goal is always to get to that best of the best. And it's just baby steps to get there. So keep eyes on the manual or on the example plan. Work through it, write your own. If you have questions about it, let me know. And then you can use, and I'll show you where it's at from the tutorial section, trade tracking sheet. This trade tracking sheet is provided by Nexgen, and this is going to be your trade diary as new users. Every time you take a trade, you're going to put it on this first tab, the trade tracking sheet. Each time you take a trade, you're going to annotate that chart. What did I do? Did I follow my rules? Did I win? Did I lose? And this first sheet's going to do a couple things for you. The first thing it's going to do is it is going to help you identify the patterns that are making you successful, identify those rules being met. But more importantly, I've found, is this is going to help you identify patterns in yourself. Whether you're trading into termination conditions, maybe you're getting in early, maybe you're getting out late. If you put each and every trade into this spreadsheet, you're going to be able to identify those patterns. When you take those trades and you post them into the room, you're going to give me the opportunity to maybe see what you don't see, to help you identify patterns in yourself. And then together, we work on correcting and adjusting and tweaking the way you read your charts to get you in line with how you should be. And that's when you really begin to make progress. The next section is your personal trade setup looks. Every time you take that high probability trend trade, you should put a picture of it into your spreadsheet. If you look at my spreadsheet, I've got about 70, 80, 85 pictures of perfect high probability trend trades. So I can go through and study these. Once again, repetition is going to help me understand and recognize. You're going to fill the spreadsheet with your looks. You're going to steal the perfect trend trades that people post in this class when you're doing simulator, when you're doing market replay. And then the final page is just a cheat sheet for you to go back to compare as you do your own study. But the value, the biggest value comes from when you post in the room. When you look at your live charts, when you hit that capture button, and maybe you only take the picture of the 13.2, and you annotate it, reinforcing the rules. Price has reached resistance and no triggers are through. This is a termination condition. Rule 2 not met, no trade. So what I've just done with this simple little bit of writing on my chart is I've reinforced my ability to recognize termination conditions. I've reinforced my understanding of rule number 2, and I'm telling myself that if my rules aren't met, I don't have a trade to take. Guys, if you take this picture, share it in class. I would love to see the pictures. I want to see your understanding of what you see. If you miss a trade, circle it. Let me know what you missed, what you saw, what you didn't see. There's that divergence, guys. They are fighting, aren't they? Here's our first one, small below the large, larger wide, no divergence, directly back to resistance inside of favorable large triggers. Nice little runner, pulls back to the mid-band inside of favorable large triggers again. Comes down, no divergence, continues down. And now when we see the 3 divergences in one location, we begin to get a little higher push. Everything is chart reading. 3 divergences, same location, small's getting above the large, has the potential to push higher. If we get back up to this 97 area, guys, let's go through the rule number 2 process. If price reaches 97, the next question that we ask ourselves is where are the trigger lines? If they all remain below, this is an area that's likely to stop the market. And while we may not have a high probability trend trade yet, a lot of people will begin to look for continuations if it begins to roll over. Maybe an edge trade. As you grow with the software, you're going to be able to see these over and over. John put a note in the room. He's updated some pics on the chart reading section on Discord, put them in the user guide. Guys, Discord is an amazing resource for you. I'm going to pull it up and give you a quick little tour. We already saw tech, such an important part. But as we come through here, starting with the educational outline, there's the self-training section. This is putting you on the path of everything that you could do in your free time as you begin to learn the software. Here's the user guides, that tutorial section, helping you find the answers that you need if class isn't in process. The trading rules for the different trades that we take, momentum trades, HVA trades, high probability trend trades. The chart reading, this is pointed towards the new user, and this is what John was just talking about. As you begin to read your indicators, it simply talks about recognizing that chart reading, being able to understand what it is that you're looking at, so that you can grow from and look for the advantages to come through it. As you grow with the software, as you get to that next level, there's an advanced chart reading section that talks more about getting that little extra, it's like building an engine and getting that extra horsepower out of it. This is where the advanced chart reading comes from. The example trades. These trades were put together and taken. Whoops, let's go up to the top. Guys, these are Nexgen users, people that have been with us for 5 years, 10 years, 3 years, 15 years. These are the trades that are happening each and every day right here in the traders chat section. People that are using the software, that are understand it, that have written out their plans. You can go through and you can take a look at all these. And if you're brand new, I love this section. Gone Bucks. Sorry, Bucks fans. What you can do is you can begin to recognize these coming from people that are using the software, that are trading it live, trading it professionally. And you can see what can be done with the Nexgen software as you get a little more familiar with what we do. On the ES, John, you took a momentum style short. You didn't have a fib at 35. Everything reverses, small below the large. There's that momentum style. Let's see if we can see the version of it. Termination condition. Full reversal bar on the 13.2. The market pulls right back to the mid-band. Guys, this is that momentum. Oh, no synth fibs on the, got you. So you had it on the 5-1. Thank you. I was like, man, where's your fib? If we look at it on my chart, termination, everything gets to the other side. This is that first shot at a short coming from a termination condition. Beautiful trade, John. And then this is from the Discord. I like this one. If the 5-1 large triggers are located above the 13.2 large triggers, not looking for those short trades yet. They're probably going to fight it out. When these two triggers swap positions, notice multiple divergences in the same location, large below the synthetic, there's that momentum trade. Small triggers must be vertical, cranking in the area. Great setup picture. Remember, everything is chart reading, and this comes from the chart reading in Discord. And these are the pictures that if you're brand new, if you're learning to read your charts, take this picture. And if you're not sure what you're looking at, just give me one of those in the room. Right on there real quick. Hey, Mark, kind of help me out here. What are we looking for? John, I actually thought that picture was the exact same picture. I didn't realize that it was from Discord at first. Large are still waning, then they work their way below, and then it gives an opportunity. And if you come to the actual market, large triggers stay above the synthetics when they come through from a termination condition. Gives a beautiful. So Z on this one, as you grow with the software a little bit, Z, what you're going to recognize is that your 13.2 mid-band from a good termination condition, from a pivot maybe with divergence, it becomes a good first target. And you're going to grow your plan, Z. This is a little more advanced, but it's going to be your chart reading, that repetition that gets you to a point where you'll probably use that 13.2 as a first target, or you'll let a loss of momentum, such as divergence, take you out. If you go to, I'm going to give you this one right here, Arnold. There's the link. You can watch me on YouTube. It's a live stream. And then come to the room, post your charts. You'll still get the same feedback. Discord does have a limit on the people that can be in the room seeing the feed. So if you follow that feed, maybe on one monitor, or even just watch what I'm doing, but have the sound. You can post in this room, give me all of your charts, I'll give you all of the feedback, and we'll get you squared away. That's all right, John. I'm getting pretty good at this stuff. So Z, does that help a little bit? Initially, as a brand new user, you're probably going to stay very rigid and very mechanical. And if you had this very mechanical on that same particular trade, you were out of this trade, money made before, right as that mid-band was being reached. And it's really that repetition that comes through. Coming through, understanding areas that are likely to stop, likely to hold. It's going to help you make great decisions. I always encourage people, focus on your entries first. Focus on the best of the best entries first, Z. And what happens is every time you take a picture of that great entry, you're going to begin to recognize when things come together for a trade. You're going to begin to recognize when termination conditions kind of stop things. You're going to begin to recognize when you can exit a little earlier. So for example, if I'm looking at odds favorable momentum on the 13.2 and I haven't reached a key area, here's one of those pivot stop outs on the 5.1, but the small triggers are outside of the large. Once again, this is not a brand new high probability trend trade, but because of pattern recognition, I can create the expectation that this pivot stop out is my potential best spot right inside of those synthetics. And then there's that opportunity as you grow with the software to look for that continuation down to the next key area. So that's what the room is really designed for, to help you guys with pattern recognition, to help you see what you need to see, and to help you through repetition get to where you want to be. Since we do have a little break in the action, guys, I'm going to share some pictures. A lot of research was done over the weekend, and a lot of great pictures were taken. And it's really just opportunities to recognize when everything says go, because what happens at these key areas are fights. Doesn't matter if it crosses the yellow dots or the blue line at the bottom. Where are we talking about, Z? Right here? On crude oil? So Z, every time I identify an area, two things happen. And I'm going to help you out with this. In order for this line, for this line, for this line to really make its way on my radar, two things happen. The first thing is price reaches the area. And remember, this is how we determine termination conditions. If we go back to the trading manual and you look at termination conditions, it becomes this process of has price reached, and then if price reaches this area, price just reached, missed it by a tick, it's that second question, Z. Where are the trigger lines? And here you can see that all of your trigger lines remain above. And because that's happened, until these small triggers break through with odds favorable momentum, I'm going to respect that area as an area that may reverse the market. Does that make sense? Anytime you see a line, no matter where it is on the chart, price reaches resistance, where are the trigger lines? Well, the trigger lines all remain below, so no more long trades until it breaks. Eventually it does, and we get an opportunity. And these termination conditions are going to happen throughout the day. There it is again, right at the 1-to-1s, right at resistance. Nothing goes through. And it pulls back to one of those 50-50 trades where the market may break, but it doesn't, and it continues up. Support, trigger lines don't go through. You can see the market goes up. 1-to-1s, trigger lines don't break, the market goes down. So Nexgen users have this great advantage of recognizing these key areas where potential fights are going to happen, and then they get the opportunity through rule number 2 to not trade directly into them. Z, does that help a little bit? Every time I see a line, I'm doing that comparison. I'm going through that comparison of area versus trigger lines, because ultimately that's what we do. Sometimes they're going to break. They tend to break more often with odds favorable momentum. Sometimes it's going to stop it cold. But what happens is if we trade directly into one of these areas, it goes back to that where you have willingly forfeited your advantage of a clear path. Absolutely, Z. Keep the questions coming. I'm a big fan of all the questions. Claire, let's see what you have. Claire, you absolutely nailed that momentum trade. Nice job. In at 30.75 on 2 contracts. You're going to make me do math. 2.5 points on the first. And what is that? 5.25 on the second. 8 points. Beautiful trade. And waiting for the advantage. I think that's the key. You guys will notice that it started with a termination condition once again. Claire, really great trading today. Nice job. Your exit was the mid-band. You were happy to get it. Doesn't matter what you didn't get. It matters what you got. Man, amen, John Novak. Guys, you know you're trading really well when you're mad about making $300 or $400 in a few seconds. Let that sink in. I am so upset that I only made $300 or $400 in that 8 seconds. Man, life isn't fair, is it? But look at that termination condition. Look at the reaction of the market. And as we approach those one-to-ones, if you were the type of person that wants to hold for larger moves, didn't these trigger lines, didn't that odds favorable momentum say that this area at least had the potential to break all the way across? Claire putting on a clinic for us today. She had strong triggers, no termination conditions, absolutely beautiful pullback to an area of resistance inside of favorable large triggers. Those predetermined targets making money one after the other. Claire, beautiful job. Nice job. Earl, nice to see you. Earl, you've kind of gotten on the same page as Ron and Ed. Taking that great momentum, letting it clear the areas, and then just looking for opportunities. Being conservative, quick profits, get in, get out. Don't have to have every tick of every move. Looking for where the advantages are the strongest and getting paid to be there. Nice job, Earl. Z, so that goes back to where the market is likely to go. If I am in a short trade, I can identify, if I entered up here at this momentum trade, I can identify that my first potential spot is here at 24 at these one-to-ones. I can identify that it may be support or maybe that final area of support. Same thing with the longs. I can create targets based on Fibonacci. The initial target may be a blue line, but I'm always reading my indicators. What do my indicators tell me as I'm reaching that potential exit point? And once again, Z, as you grow with the software more and more, you'll begin to recognize that correlation a little bit. Trading to or from lines. And that's absolutely it. And the great thing is, Z, is you're going to put yourself in a position where initially you may be very conservative, maybe focusing more on your entries. But because of Fibonacci, because of our ability to recognize momentum in the moment as the price comes into it, a lot of traders find themselves holding for larger moves. And it becomes a great opportunity. Lines, entries with triggers, lines, exit with triggers. Write that down. And there's that pivot stop out from the pivot stop out with everything saying down, and sure enough, the market keeps going. So Z, here's an example. As we approach 62, maybe an opportunity to take profits. As we get to 57, another opportunity. And then that 80-46 range may be another opportunity for a potential target. The more pictures you take, the quicker you're going to get there. So Z, every time you see something like this, it's okay to take your picture. Where's my next area? Annotate it, write it down. Because if you come to the tutorial section, guys, there's a very clear path laid out for you. And this is the path that I encourage in the room. This is the path that has worked for thousands of traders. And it all begins on your step-by-step path to becoming a confident trader. It all starts with posting your trades in class, posting your pictures in class. I can tell you through experience that the people that post the most get to where they want to be the fastest. The people that ask the most questions get to be where they want to be the fastest. It's easy to say I want to be a professional day trader, but you're not going to get there as a wallflower. You're not going to get there sitting on the sidelines, not raising your hand, not posting your pictures. Or you may get there, but it may take longer. I think it was Laird Hamilton. He's a big wave surfer. He used to always talk about how everybody said they dream of surfing those big waves, but very few people take the time to paddle out because it's scary, because it's intimidating, because it's dangerous. I think that this classroom is very much the same way. It's easy to sit on the outskirts hoping for the best result, but if you really dive in, ask those questions, continue to ask those questions, just like Z's doing. Post your pictures in the class, guys. I love trades that are wonderful. I love to see your winning trades. But the trades that I really like to see are the ones that didn't work, because then there's a lesson in there. Show me your trade directly into a termination condition so that we can spark a great conversation about termination conditions. Show me your trade where you entered just a little bit early. Z, if we go to the tutorial section, there's a whole section dedicated to trade entry and management techniques. Go through it, take a look. If you have questions, let me know, but I think that in the beginning, and I'm going to put this in the room one more time, management is important for long-term success, but your management isn't going to do much for you if you're not taking the correct trades, if you're not following the rules, if you're not focusing on giving yourself the absolute best advantages. The reason this very mechanical management plan is so effective is because it has you taking profits at $100 on your first contract. And the reason it does that is because it creates a dopamine response. There's a feeling of success, and that success builds confidence, and it makes it easier for you to hold that second contract. You'll spend 30 days focusing on your absolute best entries, but every great entry has a management opportunity. So from that same picture of your great entry, you're going to be able to manage and look at and annotate a chart that says, well, my 13-2 triggers say that I have an opportunity to get to that next area. I'm going to hold for that next area. Or you may even have something that says, I took that great entry and I had a couple contracts going, and then I get this lower divergence, that higher divergence, and this is an opportunity for me to manage out of a trade on an area that may break. So it's a step-by-step, it's a foundational approach, and we use the word foundation a lot here. The first step, if this is an elephant, your first bite of that elephant is learn when the rules are true to enter the market. And then after you learn when the rules are true to enter the market, you're going to begin to build that management plan to get out of the trades, to manage them the best that you can. Does that make sense, Z? And anyone else in the room? I've got 54 of you in here. I know a lot of you have been doing this for a while. A lot of you have built your plan. You've worked on your management. Guys, give me the opportunity to help you. Give me the opportunity to help you manage these trades. Give me the opportunity to help you recognize through chart reading when you're giving advantages away. And what you'll find is we're going to create this great relationship that gets you where you want to be. And I love this. I don't know if you can tell. I absolutely love teaching this class, guys. Every time you ask a question, I become a better trader. So it's pretty selfish, but I appreciate the feedback. What do we see right now on the ES? It depends on the market, Z. Let me see if I can find a good one. There's so many lessons. But if you're trading crude oil, let's just minimize these. We'll start on the S&P because the S&P is here. So 1 point on the S&P is from 16 to 17. And 1 point is divided into 4 ticks. So 1 point is worth $50, which means that on the S&P, each tick is worth $12.50. So every time price moves from $14.75 to $14.50, it's a $12.50 fluctuation. If you're looking at crude oil, 1 point is divided into 10 ticks. And each tick is worth $10. So on crude oil, a move from 80.80 to 80.70 is a $100 move. Does that make sense? So it depends on the market. But right now we're trading at 80.56. In order for this to be a $100 move, it either has to go to 46 or it has to go to 66. And each time price moves 1 tick, it's a $10 value. Absolutely. There's a lot of these little things as you begin to look at futures that I may take for granted. So I appreciate these questions very much. You know, one of my biggest challenges in the beginning is how the heck could I sell something that I don't already have? And I thought that was the weirdest thing. Claire is saying, and I love this, we missed Fibonacci support by a tick, right? These are areas, 1 tick. But her 5-1 gave her an indication that that 1 tick was probably as far as it's going. There's a divergence with the smalls inside, a second higher divergence. So once again, Claire's taken one of those momentum trades. Pull back to the mid-band. Trigger lines are absolutely vertical. Profits at the trouble spot, and maybe held that one a little longer than you needed to, Claire. 1 target for money, the second one break even. Great trade once again. I'm going to have to create the Claire file. A lot of great trading today. Those 1-to-1s push it right back. And guys, do you see it? Now the large triggers are on the business side of the synthetics. We saw a great picture of that earlier. Larger still inside, larger still below, larger to the correct side of the synthetics. Let's see which direction this market decides to go. If nothing else, it keeps me from looking for a short trade because I've given away that advantage. For those of you that are wondering how John and Claire were doing what they were doing, here's that exact trade. Price comes through. Large working their way through the synthetics after a great termination condition. Looking for that no divergence. Pull back right to the mid band. Right there with those trigger lines rolling. That's your first shot. Counter trend. It's a good one. Z, if the trigger lines cross fibs and reverse, it's either a strong top or bottom and triggers large move in that direction. So Z, what we're looking for a strong top or bottom? Great question. So once again, we go into that order of operations. The first thing that happens, Z, is we have a great termination condition. Price is reached, none of the trigger lines go through. Let's take a picture. I love pictures, and I think that if you steal these pictures that I post in here, you are going to have a library of wonderful things. So to define a strong top or bottom, first thing that happens, termination condition on the 13.2. So you're with me so far? Price reaches resistance, absolutely no termination, absolutely no trigger lines break through. Amazing termination condition. That termination condition creates a full reversal of the market, meaning that the large triggers go from green to red. So there's our full reversal. We'll call it triggers roll. And then I like to put this one in because if we're looking for the high probability trend trade from it, creates odds favorable momentum. To look for the trend trade, but this is your recipe right here. A strong top or bottom is a termination condition that creates a full reversal. And then if it creates that odds favorable momentum, you have your high probability trend trade opportunity. And this is if you are a brand new user, right? If you're a brand new user getting in, you're looking for that best of the best coming from that strong top, that termination condition. But the reality is as you grow with the software more and more, as your recognition increases, your ability to understand things grows. Let me go to the pictures that were posted. Well, then you begin to recognize termination conditions with a trigger line switch that give you an opportunity for momentum trades. And you'll see it from the top, you'll see it from the bottom, but it's kind of putting all these things in order. The first thing that happens is the termination. Then after the termination, your trigger lines on your smaller chart begin to identify that change. Remember down here we said that the large made it above the synthetic, and so far price remains above those as well. Multiple divergences coming from the bottom. Those large triggers look like they're trying to roll. So we can identify things, first opportunity, and then we let it all come together. Maybe we look for a high probability trend trade. And we just keep repeating this process. Rules met, rules not met. And from that Discord page, once again, I want you guys to know where to find this because these are in order as well. When you go to the trading rules, Your first trade is that high probability trend trade, giving yourself the best of the best chance of success. That high probability trend trade is going to work you into an HVA trade. And once again, this relies on those termination conditions, on those great bottoms, great tops. Trigger lines roll 100%, making it a little more conservative. Using an 8-range chart to define the high volume area. And then you start to work into these momentum trades. Once again, termination conditions become a very key concept. Understanding where your trouble spots are through chart reading. Watching the 5-1 trigger line location, the strength, and then looking for those pullbacks. So foundational learning, building up from the easiest approach to the more difficult approach. Notice how those large triggers still remain down, right? So I haven't had any other long trades. There was one opportunity for a momentum long, comes right to the mid-band, and those large triggers haven't followed. This is a pattern, guys, that repeats itself all the time. Whoops. When price reaches a Fibonacci area and the large triggers remain more than a full bar away, from the top of this bar to those large triggers, it behaves as a vacuum. It literally sucks the trigger line or the price right back to those trigger lines. And you're going to see this every day. You're going to see this on every chart. It's this same phenomenon that gets us that great entry on the 5-1. And it's just the gap theory. And here's a picture of it. It's just like a slingshot. Price pulls away from those synthetic triggers, hits an area, snaps back like it's getting paid to do it. Just like that. And what this does is it keeps you from taking longs in this area, letting that phenomenon finish. And then if this bottom is really going to hold, you'll notice that the market is on its way back up. Pretty cool, right? And now we're just waiting for rules to be met. We're waiting for odds favorable momentum. We're waiting for no termination conditions. And then we'll look for an opportunity. I won't. You will. This is yours. If the conditions are met, if the rules are true, then you'll begin to look for high probability trend trades long. If this area doesn't break, if we ultimately go below support, you'll begin looking for the rules to be met for a high probability trend trade short. It's a pretty simple process. Trade to an area, trade from an area, let the area break, don't trade directly into it, and everything works out. All right, guys, I'm going to take my second break. Got to refill my water again. Doing my best to stay hydrated here in Southern California. Don't want to shrivel up. I'll leave the ES up. We'll see what happens. We'll see if those triggers roll. It may not. Last hour, new users, belongs to you. Last hour, if you guys want to talk about a specific concept, if you want to show me pictures of something you're having trouble with, if you want to share trades that you took maybe on market replay, it doesn't matter. I want to see anything and everything that you're doing. I want to hear your questions. I want to see your pictures. And guys, I really just want to get you to where you want to be. So let's take advantage of this last hour. You guys really drive the way the class goes. Let me know what you want to talk about. We'll make sure that we talk about it. I will be back this way in just a few minutes. All right, y'all, coming back into it. Whoops. All right, here we go, coming back into it. We even said those large triggers never turned around, did they? They never worked their way up, which means that we never got a full reversal, which means that this was not a good bottom. And now what do we see? We see smalls breaking below the large are wide, they're angled in the direction of the trend. And if I'm identifying a window of opportunity on my 5-1 with rules 1 and 2 met on the 13-2, give me a Y in the room if you're with me. This becomes the area where the market is likely to continue in the event of a pullback. So as we go through and we do this math, I'm going to do this up. If the market is likely to continue from this 40-10 area at resistance inside of favorable large triggers, because of the momentum, because of no termination conditions, we can begin to identify key areas where the market has the potential to stop. Are you guys with me on this one so far? If we're looking at the 5-1, smalls outside the large are below, or they're actually above the synthetic are down, we're strong, small window. So it becomes a little bit of a waiting game at this point. It either does or it doesn't. Paul, let's see what you did. Haha. Paul says, when this resistance holds and the triggers don't follow and everything turns red and heads down, he'll take one of those momentum style to the short side, quick profits. Paul, nice trade. Great heads up trading. Those large triggers never rolled, right? So we never got a good, strong bottom in place. Very nice, Paul. I was hoping somebody would show me that picture. Guys, this is a little more advanced. It's a little more advanced. That recognition. I think one of the best things is recognizing when all of your charts agree, when everything says the same thing, when every chart's the same color, when every trigger line is headed the same direction, when there's strength, when there's momentum, when there's a clear path. It's pretty amazing how often that works out. You know what, Claire? A good walk is always a good thing. Big fan of a nice walk every now and then. So now we're just watching that S&P, right? We're looking. What do we have? I've got smalls below the large. I've got large down. I've got no termination conditions. I've got smalls outside of the large, and I've got a window of opportunity that just isn't too terribly large, is it? And it lines up with an area likely to stop the market on my 13-2. And sometimes people will even open up a larger time frame. If I open up a 20, well, that's an 8 range chart, and I have odds favorable momentum. Every chart, the patterns are the same. And I'm looking at a 21-3, and I'm losing momentum as I come into support. Being aware. Looking for 0925. When you study the software, Claire says she was looking for 09.25, the lowest area of resistance inside of favorable large triggers. She hasn't even gotten close. But through repetition, through study, she's already recognizing her window of opportunity. And the phrase synonymous with looking for 4009.25 on the S&P is looking for my rules to be met to enter a trade. Here's crude oil. They made it all the way down to this key divergence low. Trigger lines haven't broken through. Divergence prints. It's an area that must break. As we pull back up to 45, no trades to be had just yet. What would you guys like to talk about? I've got a stack of pictures. Guys, you'll notice in the owner's trading room, there's more talking than trading when there's nothing to do. Last trade was posted at 10:13 a.m. What you'll find as you learn to read your indicators is that you're going to begin to believe that 90% of what you do is reading those indicators, waiting for the advantages, putting yourself in a position where you have so many advantages present that you're literally going to take this approach where you're like, my rules are met, it's going to do what it does, and you almost get to a point where you're like, well, I don't care if it wins or loses. Because I have the advantage of momentum, because I have the advantage of no termination conditions, I can pinpoint where the market is likely to continue. I've given myself so many advantages in a look that typically wins 70 to 80% of the time. That you'll take that trade each and every time. And you know that if you take it 100 times, 20 to 30 of them aren't going to work out. But those 70 to 80 are going to get you where you want to be as a trader. So give me a Y in the room if you recognize what's happening on the ES right now, if you recognize rules being met, if you recognize identifying a window of opportunity at areas inside of favorable large triggers. Guys, this is the most basic concept that we teach each and every day. I have no control over what this market does. I can't make it go up. I can't make it go down. Hope does absolutely nothing for me. I like to share this picture every now and then. Guys, there's two types of people in the market, in my opinion. Sharks and remoras. Sharks are those big money investors. These guys have millions of dollars, thousands of contracts. And when they put in a top, that top stays. And when they create momentum, that momentum is strong. Our job as Nexgen users is to be the remora. Let them fight it out at key Fibonacci areas. Let them create those tops, establish that momentum. We have a set of rules that's been proven to win more than it loses. Be the remora. Take a chunk out of what they do. Keep taking small bites from their areas likely to hold. Keep taking small bites when they create momentum, and you're good. You're finding it blurry or fuzzy? Jim H. Hey, will the rest of you guys help me out here? Is anyone getting a blurry or fuzzy image? I'm coming through pretty strong on my side. And when I run the screen, I usually run it at the highest resolution it'll let me run it. You could try logging out, logging back in. John and I are both a bit blurry. Okay. Huh. Is that a picture of it, Paul? No, that's just a picture, huh? Somebody take a picture of my screen. Let me see what I look like, and then we'll start researching and see if we can find a way. Paul, got in a little bit low for not much momentum, right? Little bit low for not a lot of momentum, especially with divergence. That higher push makes a little more sense. Does that make sense, Paul? Not screaming here. Hard to expect half a bar pullback on the 5-1. Not even room to make 1 bar. Yeah, from where you got in. And then when that divergence prints, expectations. This is just you got bored and you were ready to be in a trade, I think. Happens sometimes. Holy smokes, that's what it looks like? Oh, we have to figure that out. That's very pixelated. Yeah, we're gonna have to figure this one out. Paul, just saw that one. Claire, yeah. Are you guys using the pop-out version? Is there a difference? Because you can run it right in Discord, or you can create a new window with the pop-out. Is there a difference between that? I want you guys to be able to see everything. You tried that one, same results? Okay, we're gonna try something here. So I'm gonna pull up the screen again. And just for grins, I'm gonna drop the frame rate. Did that do anything to help, guys? Here's the new look. That is better? Okay. So maybe the frame rate. Cool, I'll start doing that. Look at this, guys. Pivot stop out on the bottom with the triggers out. Expectations come into play that maybe that pivot gets taken out right there at the mid band. Let's see what happens. This will be fun. Still not perfect, but better. Well, let's try another one. Are you ready? I'm going to try another one. Guys, this is great. This is what the classroom's for too. Let's make it as great as we can for you guys. Be vocal. Use your voice always. So if I go screen 2, all right, I'm going to drop the resolution because maybe not all of you guys have the same resolution capabilities. That is much better though, isn't it? Maybe. Oh, that's not it. That's just yours. There's that momentum target. Remember, Paul, momentum in, momentum out, right? No reason to hope and pray on that one. It's a good one. Is this one better now? If we look at the screen, look at that, guys, right to the line, expectation filled, and there it goes. Was that chart reading or was that predicting? What did we do there? First divergence, does it make it? Second divergence, pivot stop out, matches that previous pivot right at the mid band, right at the large triggers, and down it goes. If you're doing that 100, 200, if you were in at 0775, there was your first 100. And there was your $200 target. You could be out of this trade, 300 in the bank. And now we're approaching those green lines that we drew 15 minutes ago, those green boxes. Does that make sense to everybody? We just walked through expectations. Where's our areas? Expectations. Guys, I don't call trades or predict where the market is going, but chart reading gives me a heck of an advantage coming into it. How does the screen look, guys? Give me a little feedback here. I made a couple adjustments. Is it still fuzzy? Jim H? I dropped the resolution, a little fuzzy but better. All right, one more time. I feel like an optometrist. Which is better, guys, 1 or 2? A or B? I don't want it to lag too much, though. All right, here's one more shot. Now I have 3 divergences in the same location. Now I have small triggers inside of my large triggers. Guys, do we recognize the termination condition? Third divergence, higher triggers. The odds are favorable that this market may come back up and retest a higher area of resistance because of the loss of momentum on the 5-1. Still fuzzy? I'm going to talk to John about it a little bit, and let's see if he's got any answers for me. I'm going to send him the picture right now so that he can see it. Is everybody comfortable with the expectation here? 3 divergences in the same location. If I come to my tutorial section, if I look at termination conditions, and if I scroll right down to the one that covers divergences, 3 divergences in the same location, small trigger lines inside of the large. Isn't that exactly what we saw on the 5-1? Creating the expectation that the market may push back up to this key area of resistance. And they sure are trying. 2 years ago when I began learning the software, guys, John Novak used to talk about this stuff in class. Hey, because of what my indicators are telling me, because of the information the charts are giving, I can create an expectation. And there it is, right to resistance. Guys, I don't know what the market's going to do. I never know what the market's going to do. I'm not in control. I'm very much a remora and not at all a shark. But I want you to give me a why in the room, because everything we do is chart reading. 90% is chart reading. If you see this look with the small triggers outside of the large, this is your best chance for entry. If you get a third divergence with the small triggers inside, there has to be an alarm in your brain that says, don't do it. Don't take that short. I've given away the advantage. And then we created an expectation. And I'll be darned, the market fulfilled it 100%. Pretty cool, isn't it? Dab Chain, always good to see you. Slow loading here. Triggers below. Pulls back to resistance, 21 hards down. And this is the same one, Dab Chain, that I believe Paul took. Didn't have that best momentum look, so things were slowing down a little bit. Small triggers right on the large triggers with divergence, things are slowing down. Rarely is that lowest area with a loss of momentum your best spot. Typically, let's see if we can find his picture. Slowing down, he even had a little more momentum. Start looking for those higher areas when you lose momentum. One of the reasons that we look for that lowest point of resistance for shorts is because we have odds favorable momentum, because the small triggers are well outside of the large. And it's that momentum, it's that look right here that typically gives us smaller pullbacks. As you begin to lose momentum, you'll notice that those pullbacks come a little bit deeper. Let's see if we can find mid-bands hit, large triggers a full bar away. So you start going through that pattern recognition. Guys, we totally changed direction, didn't we? We had a fib update. Actually, that was, if you were looking at your 21.3, one of these is my 21.3. That was that termination condition on the 21.3. Price came all the way down to 1-to-1s. Absolutely no trigger lines came through. That was this exact spot. These three divergences help us identify it. And now we're looking at smalls above the large. The large are wide. They're angled in the direction of the trend. The patterns repeat themselves on every chart, every time frame. Your job is to learn to read and study and recognize these patterns when you get there. And that's what this classroom's for, is to help you do it. If you're on demo, you're not going to be a professional day trader in 7 days, but what you are going to do is recognize the approach that we take to education. You're going to recognize the support that you get. You're going to recognize that there's a platform available for you to get feedback every day. It's up to you whether or not you take advantage of it. Anybody ever played golf with that old guy that had the best swing you've ever seen, even though he was 70, and he tells you, hey, you should try this with your swing? And when you do, everything gets better. Guys, I'm that old guy for you. I've got enough repetitions that I feel really comfortable with reading the indicators, with reading your charts. Let me help you out. 15 hours every week. That's my sole purpose in life, is to get you where you want to be. Once again, weak triggers, multiple divergences, and that market moves on up. Isn't it crazy? Repeats itself over and over again. Market does what the market does, guys, each and every day. Sometimes you try to take that perfect trend trade, right? Everything says go, all your rules are met, feeling good about it, and it overruns. You lose the trade. That's okay. That's part of it. Everything remains down, triggers roll. Sometimes there's an opportunity for continuation. Guys, this is from the chart reading section. Just because the trend trade loses doesn't mean that the market is going to reverse. Sometimes it just means that those buyers wanted to push it a little bit higher. Bristaga, are you talking about on crude right now? Or are you talking about the ES? Actually, it doesn't matter. We can go through it pretty simple. If I'm looking at crude oil right now, when my background is red, I'm looking for rules to be met for short trades down. When the background is green, I'm looking for rules to be met for high probability trend trades long, because we're in an uptrend. It's really that simple in the beginning. For the new user, that's the approach that's going to help you out. So right now, background is green, Bristaga. Which way are we looking for the rules to be met for high probability trend trades? Anybody? I've got a green background. Up or down? Let's keep it simple. Terrence, you say you're only looking to buy the market in an uptrend. I do not disagree, my friend. But what do we take into consideration? We take into consideration, first we establish the trend, right? Do we have odds favorable momentum? Do we have small triggers above the large wide angled in the direction of the trend? So right now we have 4,963. It's an area with the potential to break because of the momentum, but it's not fully broken, which means that if we look for an entry on our 5-1, I need a tiny little window of opportunity. I need it inside of favorable large triggers, and I need no divergence. And that's my only option if I'm a high probability trend trader. Does that make sense? And then if we want this 4,963 area to be considered broken, well then both the small and the large have to get above it. The 8-2 just hit the mid-band. 13-2, Terrence, right here. Sometimes it does. You know what's cool, Terrence, is we have a great rule for when that mid-band's considered an absolute termination condition. In the large sharp mid-band, if the large triggers are a full bar away, and we got a picture of that one live earlier. This is almost the exact same look, isn't it? 40 minutes ago. Price reaches that mid-band, Terrence. Look how far away the large triggers are. More than a full bar. This works as a vacuum. If you look at the current market, price has reached that mid-band, smaller through the area. The large triggers are working above that reversal bar marker, and this is what I like to do. I've gotten to where I can do it visually. Where are my large triggers? Look where the top of those large triggers line up. Right in an area of support inside of favorable large triggers. If you're going to take a shot on an area with the potential to break, your best of the best area happens to be right here. Guys, John posted a great entry look. A lot of pictures of it. Dab chain, let's see what you got, bud. Is this setting up to trade into resistance? It sure looks like it. So dab chain, look at where your large triggers are, all the way down here. One of them is down, one of them is up. And it looks like you're trading directly into areas that not even your trigger lines on the 5-1 have gotten through. That's setting up to trade directly into resistance, dab chain, absolutely. Good question. Another pick. John says this is for Terrence. When trend trade short, when all triggers and areas agree. And then when all triggers agree, that's that quick momentum one. That's a good picture. Mark, the top part of posted charts and pics you review looks like water got on a painting. It sure does. We're trying to work through that right now. You guys are catching it a little fuzzy. You got both targets, Phil? Sometimes you get that, don't you? There's that exact picture. When everything is strong. Look at this, guys. If you don't think the market repeats itself. Look at this look. And look at what just happened. It almost looks like John somehow used a time machine to come back to this look. Dab chain, this one's for you. And guys, I love this because it's true. When you trade and practice the wrong rules on simulator, you're brave and you win those trades because you don't care if you lose. You'll do things unknowingly that will sabotage your live trading in the future. You are not practicing very strict, repeatable rules, and this is a mistake. When you switch to real money with a false sense of security and honestly care about losing money, you will normally lose 4 of your first 5 trades that do not fit the rules, and you will lose 100% of your confidence. You think it's a mistake, so the next few days you continue to wipe out your trading account. In disbelief, you will then start a negative psychological spiral that's hard to get out of. Has anyone ever done this? When you realize you now have spent months lying to yourself, you must now start over from day one and do it the right way. It's going to be a frustrating moment, but this is avoidable. Don't be a victim to human nature. We have the answer to confidence building. Learn the rules, post the trades, use the spreadsheet, do it correctly one time. Keep this picture on your desk, look at it every day, work hard and be consistent. Long posts, but don't do the wrong trades on sim is not winning long term. It's practicing long term failure. I agree. 100%, guys. There is so much truth in that. Terrence, everything says up. You take the pullback to support, take it off at resistance. Everything agrees. You're starting to break through this area. Nice trade, Terrence. Currently rebuilding confidence, dab chain. Yeah, I think everybody that I've met in the wonderful world of trading has done exactly that. Has done exactly what you're doing. Terrence, it's interesting. You're using an 8-2 for your large chart, not a 13-2. Everything rolls. That's probably a 13-2 trigger there. Everything's going down. You take a momentum style. That's awesome. I love that phrase, works for me. Guys, what I teach is a basic approach to learning to read your indicators. What you're going to find is what works best for you. And Terrence, this obviously works really well for you. Nice job. One of the things that I love about this room, guys, is there's so many people that have made mistakes. There's so many people that have tried to do it the wrong way. And so many people will chime in when John posts something like that. Yep, been there, I've done that, I've done that, I've been there. And what you find is you're just not alone. There is a very clear, correct path. You just got to get there. Who posted this one? Geo, not a strong bottom. I agree. That's a pivot that doesn't come from anywhere. But more importantly, is you have an absolute wall of resistance with not one trigger line through it. Just in a hurry up and wait, right? Bruce T, was it you that asked about the ES versus crude? I don't think I ever answered that, and I apologize. I'm going to give you the Sunday school answer first. It doesn't matter what market you're trading, whether it's Tesla or Apple or the ES or crude. If you really focus on rules met versus rules not met, if you are just rigid on the only way I'm going to risk my money is if my rules, which have been proven, which have been tested, which have been practiced, are met, what you're going to realize is that it doesn't matter. We look at both crude and the S&P in this classroom because they both tend to give a lot of opportunities during the day. They both tend to trend nicely. And more than anything, because it is an education room, there's enough opportunities first for you to learn and then for you to make money. So while they have differences, why news may affect one more than the other, essentially either the rules are met or the rules aren't. And it doesn't matter to me which market I'm trading. But what I do think is that as you learn what makes you comfortable and you're in that process of learning, focusing on one rather than two tends to be more advantageous, because what happens just historically from meeting people is when you miss a trade, like, oh, I should have caught that one. So you go, well, was there one here? oh, I didn't catch that one and I didn't get this one. Well, I'll take this one even though it's into resistance that's likely to hold, because you get that feeling of missing out a little bit if you start going back and forth like this, trying to get the opportunities. So practice on both. When it's time to really get going, focus on one. Be great on one before you add to a second. So sorry I didn't answer that earlier. And that's the same one. As long as you do what the charts say, it doesn't matter. And Terrence, when you get frustrated, post in the room. You'd be amazed at how much frustration can be pulled out of your day when you post. A lot of people get frustrated because they take what they think is the absolute perfect trade and it loses. And guys, I'm that voice that tells you that if you take 100 of the absolute perfect trades, 20 of those you're going to have your butt handed to you. And you're going to be like, oh my gosh, what did I do wrong? This stinks. I'm not doing it right. I don't get it. But if you post those charts in the room, hey, Mark, did I miss something? Man, we're going to put the checklist on it. And you're going to be like, no, well, no. I took a trade that fits every rule, that gives me every advantage, that statistically has been proven to win more than it loses. All right, that was a cost of doing business. And that's the one. And learning to read the charts. 116.23 E-mini S&P. Wait for the breakout. Let everything agree. Take the trade. Take profits at Fibonacci. That's a good picture. Guys, they're just entries, right? Everything agrees. Wait for the breakout. Sell the pullback, take your profit at Fibs, wait for the breakout, sell the pullback, take profit at Fibs, rinse and repeat. Wait for the breakout, buy the pullback, take profits at Fibonacci. This is everything that we teach. And if you focus on the best of the best in the beginning, what's the phrase? Learn your rules like a master so that you can break them like an artist. The trades that I just showed are the meat of what you do. There's more trades, but if you wait for a good bottom or top, wait for the breakout, you can get out of a slump. If you're in a drawdown, slow down, take the perfect trades only. I find myself taking more trades when I'm winning more, and if I start to lose, I dial it back and take perfect trend trades. That's it. True story, I've had people call me, I've had people text me, I've had people Skype me. And when they do and they tell me, hey, I'm struggling, I'm not catching what I want to catch, or I'm chasing everything, I always put this challenge on people. I say, hey, do nothing but this checklist. If you're struggling, if you're in a slump, if you're losing more than you win, take a deep breath and say, all right, something needs to change. Guys, take this checklist. And I haven't met anybody, and this is a true story, hand to God, myself included. I haven't met anybody that spent 5 days doing nothing but high probability trend trades and didn't show at least an 80% win percentage. This is historical. Future result or past results don't guarantee future profits, all those legal things. But so far in my experience, myself included, I haven't had anybody follow this checklist, regroup, refocus, focus on the absolute best of the best, and get their head right and say, okay, I can do this. I can recognize the advantages. This is my best look. And then start working. From that. John, when I click that, there we go. Guys, this is a Word document. First 3 days worth of 30 days. Download that. Take a look at it. But sometimes you just got to regroup. You just got to keep it simple. So little triggers above, no resistance, divergence, pull back at 100 in fibs. This is right, no. So dab, if we look at it, this is a great picture. So dab, that's an area of resistance with absolutely no trigger lines through. And what that means is that this is a termination condition. This really verifies that it's a termination condition. None of the triggers go through. This entry right here, you just paid for commissions just for the fun of it. This entry here is a good looking momentum trade to get you up there. I like what you did here. Quick profits. Second target could have been right about a little bit higher. And then this one right here is into the termination condition. So if you keep this one, and that was 15 plus 19, right? And this one was -4 plus 5. You got net +1 with a lot of headache. Net +2 with a lot of headache. So this one, after your commissions, is really a -1. This one's a 0. If you focus on that best that gives you room to get to the target, you can eliminate a lot of that headache. And 90% of what we do is reading our indicators, and it's going to be that 10% that gives us an advantage. So it's good trading, you're going the right direction, but that little bit of patience, rule number 2, identifying those termination conditions, letting them break, man, that clear path is a wonderful thing. That clear path makes such a difference, because if you just open up your 13.2, guys, and squish it up, even if the market continues in the direction, how many times does a termination condition give a bounce big enough to take you out of a high probability trend trade? Even with odds favorable momentum, how many times do those termination conditions just absolutely ruin your party? And what happens is you begin to recognize them and you begin to trust them. And then when you let them clear, everything gets easier. The headaches get less. The hope goes down. And that phrase, I hope it goes up, turns into indicators say it should go up. So let them clear. Well, by let them clear, what I mean is if they're a termination condition, you don't have the advantage of a clear path. Same thing that we talked about when we talked about termination conditions. Let's go to the manual for the example, just in case you guys need it. I know what John's doing here, and he's absolutely right. When a termination condition, you're waiting for both sets of triggers to get to the other side. That's coaching from the sidelines, guys. That's a good one. Let's find a good example here. As you begin to look for the longs, smalls above the large, when the smalls break, it has the potential to break this area of resistance. When both the small and the large clear that area, that's what I mean by let them clear, resistance begins to act as support, and now you give yourself the advantage of that clear path once again to reach the next potential area. Price reaches resistance. In order for this area to be broken, both small and large find their way to the other side of the area. Small and large break below support. Support acts as resistance. This area has been broken 100%. Smalls break, large don't. It has the potential to break, but it hasn't broken yet. Wait for everything to look perfect before trying to find that trade. Stop worrying about being bored. There you go. Price reaches an area of resistance. None of my trigger lines have broken through this area of resistance. And you'll notice even here, there's divergence from that key area. Small triggers remain below. In order to look for a high probability trend trade long, we can't have a termination condition in our way. We've given up the advantage of a clear path. So there's our S&P trading into termination conditions as we go into the lunchtime hour. Now, small trigger lines have broken above these key areas, which means that this is an area with odds favorable momentum, has the potential to break. This is what we call one of those 50-50 looks, guys. It's a medium probability trade, but probably your medium probability trade with the best chance of success if your entry conditions on the 5-1 are perfect. No divergence, strong trigger lines, tiny little window of opportunity. This particular case, this is not the perfect look. The large are up, synthetics are up, but there's a big gap between the two. Lack of divergence, lack of areas creates a bad high. 50-50 when the large triggers are down but not below the Fibonacci area. 5-1 chart divergence says don't take that 50-50. Wait for the trigger lines to go up, resume the trend after a bad top, looking for opportunities. There's a bad bottom. Didn't reach the key area, not coming from a termination condition, exactly like the picture just posted. We have a 50-50 trade into this area, likely to stop the market. We've already had one divergence, potential for the second, not the best of the best look. This is a look, guys, if you look through it historically, when the area isn't reached, that mid band is reached, it's 50-50. The market becomes a very big fan of finishing. If you miss by 3 points, it's different. Divergence from this bottom here would be a better indicator to correspond with the divergence here. But it's a 50-50. Your window of opportunity extends from 28 all the way to 17, which means that you have 11 plus getting on the other side of those triggers. Not the highest probability. Still a good look. Sometimes you can go to, whoops. Some users will use a tiebreaker. 21-3 is directly into one-to-ones, directly into mid-band with the large trigger still down. You can go to an 8-range chart. Eight-range chart suggests that more up is possible. So you've got a little bit of a mixed bag going into it. NG, you took the stab back. Where's your 13-2? That's a 21-3. Is this your 13-2 here? I believe it is. 13-2 says up and strong. 5-1 says up and strong. 8-range says up and strong. You took a pullback directly to support inside of favorable large triggers. Target 1's already been hit, and target 2 is trailing. You're willing to risk a little bit, but not much going into that area. NG, nice trade. Nice trade. And guys, that's it for me today. We made it through our 3 hours. Great Tuesday. Welcome back from the holiday. I hope you learned something today. If nothing else, I hope you learned that it's okay to ask questions in this room. Each and every question we're going to do our best to answer every time you ask. I appreciate the participation. I appreciate you guys showing up and